Welcome to Momentum Monday. Today is June 12th, 2022. So Howard, you've been traveling a lot lately. You've been to Amsterdam and now you're in Toronto.
Yeah.
How is inflation going on there?
I don't know if I'm bored. I don't want to bore you, buddy. But hopefully you're doing well. Sounds like you are. Inflation is different for everybody. We think about it. Like for me, it doesn't, you know, in my portfolio, the damage in venture and in high growth, you know, was it was just when the trend was on was on so long. So there was inflation that was helping me. So the inflation helped me, which is weird because if you were long, growth stocks, you had this benefit of inflation. Now inflation's a bitch because those 2 years are gone if you didn't sell anything on the way up. And so you feel poor. Like even though we're not struggling, people like me have had software gains or in venture capital, had some success. Inflation's still a win, and we don't feel the full brunt. But we rein in our spending. Like if I'm in any indication, we rein in our spending. So the little treats that you gave yourself, you take away, right? But it doesn't affect our daily life. So it's hard for me to say, but like I was telling you recently, my son's noticed the price of gas and he never noticed anything, as a 23 or 24-year-old. It affects his budget and it freaks young people out when something, they live on such a different budget than other people in lower middle class too, or middle class. And so something like energy tripling totally shows up in their budget. So it's brutal. Like, what are you seeing?
I mean, I'm definitely seeing that there is a little slowdown, like, people in general trying to spend less. So, and as you know, market is typically trying to live or to discount 6 to 12 months into the future. So maybe the market is discounting recession 6 to 9 months down the road. That's what I'm basically saying in terms of my spending. I also definitely have tried to cut a little bit my spending. So
Yep.
I guess and
So
if everyone does that, that's how you get the recession.
It's already happening.
Yeah.
So wealthy people are just cutting. They feel less wealthy. That multiplier effect, even though everybody else feels it relatively more, the problem is at the top end, that spending that happens is such fringe spending, and it just gets shut off. Like shut off. People that have to go to work and spend money on gas every day and do those things doesn't get shut off because they got to survive. But this fringe part of the economy, it just tightens up as people feel poor. When you can see it in the prices. So walk through the indexes there.
Yeah. So it seems that recent bear market rally that was attempted basically fizzled.
Yep.
And the premise behind it was that inflation has peaked in May, or in April, I mean. But the latest CPI data from Europe and from the US shows that that's not the case. Actually, it is accelerating. Yep. And this is why we saw that those two huge distribution days in the Nasdaq 100, Thursday and Friday, in close near the lows. Yep. Basically, it could be the beginning of a new leg lower.
Yeah. And we're seeing it in crypto all weekend. When it was just down 10%, down 15%.
Yeah, exactly. I mean, there's been so much leverage in crypto and now we're seeing the deleveraging that it's really hard to really tell.
Correct. It's like 2 weeks ago, the crypto people were like, oh, it's holding up pretty well. Well, guess what? One weekend later, and it's doing worse than the NASDAQ by like double. So like NASDAQ's down 30% and Bitcoin's down 70%. So,
yeah, it's always been more volatile, and it's just.
So it's pretty funny how like that changes.
I mean, the sad thing is that in the past year and a half, there a lot of people that before that they never touched anything like any stocks or crypto. They went pretty heavily invested, and now they're, I know people that are down 70-80%, and they
And there's
said,
no liquidity. They don't even know how to sell.
and they
So
said
it's
we're not
like,
selling. Like it's down so much that
it's
we're not
Kathy
selling.
Woods times a million. Everybody's Kathy Woods in
Yeah,
crypto. So go pull up ARK. That's everybody's crypto account. Okay. Now, the sad thing about crypto is 50% of the people that have ever owned crypto are like, or at least 50%, if not 70%, are so underwater. Like they were new to crypto. So that's an ARK fund, which is basically like Bitcoin. Okay. Like at some level. And that's every portfolio of every crypto person in the last 2 years. They were up 800% or 8,000%, and now they're down 90%. And the few that got out, God bless. The rest of now you got to go back to building. We'll probably have to have regulation in crypto, which is great for who? The banks. And guess what? You need the banks because if you leave these people to themselves, they just steal money and grift from one another. It's pretty funny. And Coinbase is, I'm guilty of like owning some and being an idiot because it was my levered way to own Bitcoin into this crash. Well, guess what? It's a bad idea. And everybody's melting down. Management's mad at the team. Everybody's turning on each other. But cooler heads are going to prevail at some price. But the market can just, destroy you on the way to that price. And so a lot of people and a lot of employees at Coinbase who have been hired the last 3 years are never going to see their money return. So there's a lot of unintended consequences of this crash in tech that are going to take a lot of years to fix.
yeah.
Fascinating. And the DocuSign CEO, I put it on my blog today. He had a thread saying, like, how do you retain people? So quickly, and then I'll pass it back to you, Ivan, just because I'm yammering away here. I think the most important interview I shared on my blog was a Stanley Druckenmiller interview. And it was very like manages his own money. You don't have to trust the guy. He tells you all the things of why you shouldn't trust like the stuff that you're reading, like don't trust 13Fs. It's past information. And he tends to be, generally born a bearish guy. But, he's traded for 48 years. Right. And he's looking at this market and he goes, in 48 years as a CAO, he's never seen a market like this. Okay. So he's seen some things. Then he was going back through history and saying in areas where oil's up, interest rates are up, and the US dollar's up at the same time, what happens next is not good. Okay. So it's not like nothing bad can happen from here. And he was like, at the same time, he was like, I hope I'm wrong. And I'm not telling people to go short. You know what I mean? He's giving you all the reasons though of like this is not good. So, you've been high cash, I've been high cash. I don't know what you do here. Like, what are you doing?
You just have to be very nimble and just take short-term trades because as we saw in the past few weeks, you have, even during bear markets, you have those occasional short-term bounces that, that you can see stocks go up 20, 30, 40%.
Yeah, if you're a trader and want to like nibble around the edges, but
yeah,
like
in a week or two. So even look at, especially in energy, look at this one, like BPT. It's up like what, 400%, 500% year to date. Like it offered quite a few swing trading opportunities. Like basically every pullback to its rising 50 or 20-day or age contraction.
We've been talking about XLE.
Yeah,
it's just basically XLE, OIH.
There are not that many opportunities, but there are opportunities basically every week, at least one or two. You just need to be more focused and just not over trade less basically, and just make sure you protect your capital and more importantly your confidence, so when the next turn comes you'll be ready to fully capitalize on it. That's basically
I have no ideas. I've been wrong.
Do you own any energy?
What's that? Well, it's not my thing. Like you can't 56 and I don't trade full time, so I'm not gonna like pile in to learn energy. Like people should watch XLE or OIH and buy dips. Like I don't know, I trade it like a technical person at this point. Like I'm not against that, but like I won't know when this trend's over because there's so many macro leverage things to this. But for a classic trend follower, these are in great uptrends. And you just gotta be disciplined, because if you don't understand the underlying, it's super It's super tough. But the energy people that I'm listening to are saying this kind of the beginning, and these guys have been hunkered. So I don't know, like what,
Mhm.
like this, you know. So
I mean,
if they're
at
right,
this
that's
point,
not good for the economy.
it's a momentum move. So there are a lot of players that don't really understand energy. They're just playing it for the price momentum, which
Yep.
you know how it exacerbates the move
Yep.
momentum tend to exacerbate to the upside and to the downside.
Yep. And
Uh,
energy is only 4% of the S&P, so it's like no one owns it. It's a tiny speck of an S&P. So people can't get access, and if they want to get access, this could be a jihad to the upside. So I'm not gonna. This could be AMC times 10 because there's real money here.
yeah. So what's your take on Tesla right now? It's
I don't know. I mean,
down
again,
44% from its highs.
I think he's been a seller. They've had the greatest run of all time. The stock. If you told me a year out the stock was 700, I would say the shareholders should kiss the earth. That they're long today. That they were flat. And if you told me the stock was at 200, I could still tell you it's overvalued. So what do I know? Like I have no edge. I've had no edge in that. But I wouldn't, it's not, I'm more interested in Apple because they've proven that they've got the future thought through. And crypto's now up for grabs. The blockchain's up for grabs, right? Like everybody's out of business. So if Apple wants to take a stake with Goldman and JP Morgan and say, listen, we're going to put some rails on a stable coin and we're going to launch a wallet and crypto is going to be regulated and it's a fun highway. And why wouldn't, people fucking go bananas. So, but at the same time, Apple's breaking down. Like Apple's making relative lows. So like, why the hell do you want to own Apple? Like, right? Like technically it's a mess.
Yeah, I mean, in some cases, I guess if you cannot be in cash, you have to own something, and owning
Yes.
treasuries hasn't been really working well in
No,
this.
and the US dollar, as even Druckenmiller was saying, like I've been hiding out in US dollars, but like this doesn't end well generally, especially with inflation. So it's on borrowed time, based on policy. And this is a momentum trade too. People somehow are feeling comfortable with cash. And a year ago, they hated it. So it's fucking bananas. So just for somebody to say with confidence that they know what's going on here, and it's, I would run from that
I mean, we
person.
all know that the central banks are way behind the curve.
Yeah.
The
This is the
ECB,
most, yeah, they're way behind the curve. This is the most like take the time off and like, yeah, lick your wounds and like regroup when a better idea. Because like what Druckenmiller was saying, his best idea is to fucking be short, but because he's so expecting a rally, bear market rally, he doesn't want to lean into things. So when the best investors of the world are hoping for a rally so they can get short, I don't have an edge. Unless he's lying and like buying everything under the sun, and then that's kudos. But I think the average investor should heed like the technical warnings that have been going on and all the other signs, economically that they should be really conservative.
are you
Right?
nibbling on something right here, or you're just so
No, I nibbled a little PayPal just because, 2 times sales, blah, blah, blah. But after Thursday and Friday's price action, that was a bad idea. So I just don't think, unless you're prepared to own these things for the next 4 or 5 years and take another 30-40% drawdown, like there's no edge in owning fintech or tech, right? But I know that PayPal is not a crypto company, but has crypto optionality, and Venmo and Braintree and their core PayPal business. Geez, it's a real fintech company. But on the other end of the spectrum, MasterCard won. Like all the crypto guys are like, we're going to disrupt this and we're going to disrupt that. And they're stronger than ever. So there are signs that like the economy is hanging in there, but the weight is like implosion.
But look, by the time
what's your gut feel? What's your gut feel?
I think by the time the newspapers and the media starts talking about recession and that it's already here, maybe the market is going to bottom just there when we have a recession on the first page, basically.
Yeah.
Because
No, the recession now is getting priced in. I don't think what's getting priced in, Ivan, is just how overvalued things are for where oil is and where profits are going to be. So I agree with you. Recession, that's priced in. So the market continues to head down, even though everybody knows we're going in a recession. And I think it's worse than that. I just think profits out a year with oil at these prices are not going to be good. And if US dollar weakens, that's not going to be. Sorry, if the US dollar continues to strengthen, that's not good. And rates don't seem anywhere close to reversing, so that's not good.
So yeah, I mean, we saw Microsoft lowering guidance because of Forex reasons.
Yeah.
If they're having issues, any other international companies having.
Yeah, they have a treasury department that's like probably 100 people.
Yeah, it's having similar issues, probably Nike and all the other international companies. But
good point. Good point.
So
like
the S&P
none of these. The good news is
what, 19%.
The good news is if we bottom this week and like right suddenly, the Fed all of a sudden, switches sides and somehow inflation, where they say they found oil on the moon and Elon Musk says he's going to drill for oil. There's a lot of things that could lead to like a fast rally. But man, this is brutal. People should really be careful. It doesn't pay it at this point to just be bearish or miserable, but people should be careful.
Yeah, I mean, the S&P is only down less than 20%, considering that huge advance before that. I wouldn't be surprised if we go down, have like a regular 30-35% correction. It's not even down that much. Obviously, mostly thanks to energy. Tech is down a lot more, and tech is down 30%, and small caps are down 27%. So obviously, a lot more damage in cloud and semis.
Semis just seem to be rolling over finally now, for real. I just think that's another reason to be careful. And then the banks started to catch a little of the fever.
Oh yeah, absolutely. The banks.
A little bit of the pain.
Probably
that was an ugly week.
Last week,
and, I was saying that Goldman's holding, that's a good sign, but these things could be hidden full of leverage that we don't know about.
Wow.
Ooh.
It's not really holding, it's just showing relative weakness. Look at it.
Ooh. That was kind of a relative strength stock till about 2 months ago. So, yeah, that's not good. Where's JP Morgan? Also nasty.
Yeah, I mean, definitely banks were the weakest sector last week.
Where's the housing? Where's housing, Ivan?
If you look at the yield curve, it's basically flattening. So, so housing is down 32%, despite still strong earnings. But as we said, the market is forward-looking.
But housing's so unaffordable. Like, this is not good.
Yeah.
And then you look at the rate chart, and it's just like, oh my God. Like TLT, if you just.
Well, yeah, this is a 20-year longer term treasuries. Yeah, down 27% from the 52-week high. So probably the weakest start of any year.
Charlie was saying it's weakest start ever. So if you really like pain, and really you can dabble, like I have a couple times on the long side because you're not a short seller, but like, I don't recommend it. And it doesn't feel like we've hit levels that like people are, buybacks occur. I think tech, a real problem is that tech is over-owned by a lot of people that think they understand it. And they may understand tech, but they don't understand macro. And they don't understand options and how companies can go, lever backwards when people start leaving and the brain drain happens. But anyways, we'll quit it right there. There's a lot of good things that will come out of this bear market. A lot of good things that are happening, but a lot of this capital has to be flushed out. And I look forward to seeing you this week, Ivan, everybody.
All right, guys. See you next week.
See you, buddy.